Good afternoon, everyone. I know this is generally, from a biorhythm perspective, a low point in the afternoon. So I just want to say to you, take a deep breath, buckle your seatbelts, because it's going to be a fun ride, okay? My name is Andrea Mainelli. I'm a senior advisor at Tyton Partners, and we're a strategy consulting and investment banking platform that focuses exclusively on education. I co-lead our impact practice, and today I'm delighted to be joined by really 5 exceptional investors in the education impact space. Before we let them start talking, let me just set the stage a bit for context. In many regards, one could say we're in an unprecedented crisis in education, precipitated by COVID, other global events that really expose the cracks and gaps in our education system. There's widening gaps in performance among socioeconomic and demographic groups. There's learning loss that could have ripple effect for years. There's social, emotional, and mental health challenges. We have burned out and disillusioned teachers. We have many parents who have lost faith in the education system. And finally, as we all know, there's been the politicization of many education issues. This is not what I would call an encouraging environment. However, it's against this backdrop that these funds, these investors, have chosen to invest to try to create systemic change. That's what we're going to talk about today. How do they all define themselves from an impact perspective? What does it mean to be an impact investor? What change are they trying to drive? And what do their investors think about that kind of change, and how do they think about it? Are they driving change? Are we really seeing an impact? So with those framing thoughts, we're going to get started. I'm going to ask each one of the people to my left to introduce themselves, talk about their fund, talk about what impact means to them, and also to try to give us some examples, if they can, of an impact investment. I'll start on my left with Marc.
Great. Hi, everybody. Hi, everybody. Great to be here. Marc Sternberg, co-founder and managing director of A Street. Maybe to tell the story of A Street, I'll tell a little bit about my path to this job. For the decade leading up to the launch of A Street, I led the Walton Family Foundation's education work. And we saw a lot happen over the last decade, and I would say over the last 20 years, the 20 years I've spent in education, the work of being an educator has gotten harder over those years. And you talked about the data. It is hard to stare at that and feel good. We center on one simple thing at A Street, and that is solving that problem, making it easier for the educator to be sustained and to be successful. We are a 15-year fund investing across stages and against a thesis that more high-quality instructional materials and tools and better assessment tools that are aligned to those that can be experienced by the teacher and student in a coherent way, in a world of no silver bullets, can make things a little better for the educator and a little better for the student. Our measurement of impact, and we'll talk about this, I'm sure, is a simple question. Are we accomplishing, are we listening to the educator and the user? And are we providing tools that can scale, that address the need of the educator, that are high quality, that are easy to use, that are presenting data in coherent ways? And when I think about our portfolio, we can talk about really great reading, which John and I work with together, Great Minds and Amplify, or Course Mojo, companies that are thinking very hard about what the educator needs, which is the center of our bullseye. So Marc Sternberg from A Street, look forward to the conversation today.
Good afternoon, everybody. John Samuels with the Vistria Group. We are a Chicago-based middle market firm, about 10 billion in AUM. We're raising our 5th fund right now. Been around since 2013, so going on 10 years. And at Vistria, I'll talk about my background as well. The high level is I had a career in government before coming to Vistria, so I spent over a decade on Capitol Hill, numerous campaigns, including presidential campaigns, and then 6 years in the Obama White House, and then came to Vistria as we were getting started. The firm, Vistria, it's very hard to find a name no one else has taken these days, so Vistria has a play on Latin and Greek, and it means the power of three, and that speaks to our thesis around the value of embedding in the GP operating expertise, people who have run companies at senior levels, traditional investment expertise, and then also policy and regulatory expertise with a strong focus on impact. We don't market the funds as impact funds, but we've from day one had a very rigorous discipline and commitment to scaling impact alongside returns. We invest in healthcare, financial services, and education. We selected these sectors because we think they're critical to the success and stability of any economy, including ours, and because they're so ripe with an impact opportunity. And so we look at impact across really two main categories. One is traditional ESG, and we put that under the umbrella of business conduct. And we've got a really strong focus within ESG on DEI, and I can talk about some of the innovative things that we've done across our portfolio. But where we spend a disproportionate amount of our time, and you'll hear lots of variations on this theme, is underwriting the impact associated with each business's core products and services. How are we addressing the questions of access? How are we addressing the questions of quality? And how are we importantly addressing the questions of outcomes associated with these core products and services? And then how are we ensuring that as we scale the revenues of these businesses, we are also nurturing and scaling the impact along with each of them? And so really great reading. We're thrilled to be partnered on that with A Street and Marc. That's an investment in the literacy space. We know right now, to your point, Andrea, coming out of COVID, 60% plus of our students at the 3rd and 4th grade level are not reading with proficiency at those grade levels. And that's a key indicator of future academic success if you're not reading on track at those ages. And so really great reading is a great intervention to help prevent and then remediate the lack of proficiency in reading at those ages. So that's one example, but I've got several others I'm happy to share with the group. Thrilled to be here with all of you. Look forward to the dialogue.
Great. I'm Vivian Wu, and I'm managing partner for our ventures team at the Zuckerberg Initiative. Probably one of the ways in which we're a little bit different from my colleagues here on the stage is that we are doing impact investing within a philanthropy. So Zuckerberg Initiative was started in 2015 by Mark Zuckerberg and his wife Priscilla Chan to build a better future for everyone. One of the things that we do is to actually use a variety of tools to achieve our impact objectives. So a large part of our work is in grant making. We have policy focus. We also have engineering. And we also have impact investing. And our thesis in impact investing is that if we can find mission-focused entrepreneurs who are bringing innovative solutions to the social issues that we care about, we can actually transform these areas in ways that are sustainable and that are scalable. So we view it as very complementary to the other work that we do. In education, the way we think about our scope is that we invest across the lifelong learning spectrum. So we have companies from early childhood, like Love Every, Age of Learning, Bright Wheel, companies in K-12 like Newsella, New Globe, Nerdy, Byju's, and then also some post-secondary and pathways companies, including Trilogy Education, Open Classrooms, Andela, and Handshake. The way we think about impact is we absolutely view ourselves as an impact fund that is embedded in what we do. It would not be considered success if I just build a portfolio of successful venture portfolio companies. We really are looking to drive change. And for us, the way we think about impact in education is how do we actually ensure improving learning outcomes, employability outcomes, and also increasing access and affordability. One of the things that we benefit from is the fact that I have colleagues across the organization who are educators, researchers, scientists, policymakers, and technologists who we can rely on for their input, but also input from the ecosystems that we're granting and funding in order to make sure that the investment decisions we're making are informed from an impact perspective, recognizing factors that are outside of academic success, but are focused on comprehensive student development, focused on learning science, And then we also are able to leverage that expertise as we support our portfolio companies. So it's very important for us to make sure that we are quite aligned in terms of the areas that we invest in. My own background is I come from a traditional investment background, and I think that's part of where I do think it's important, even in impact, to invest in companies that are going to be successful so that we can scale the impact. And I've worked at a lot of traditional firms like Accel Partners and TA Associates, which view the world from a market-based lens. And I think I'm very fortunate now to be able to combine my personal passion with some of the rigor of what I did in the past. So.
Hi, I'm John Rogers with DPG's Rise Fund. Andrea's mind is so broad and expansive that she works in about 45 minutes worth of questions into her opening salvo, but I'll try to keep it a little bit briefer. So the Rise Fund was launched in 2016, and education's one of our sectors, also healthcare, energy, and financial services. Vivian spoke about mission-aligned investors. We look for what we call collinearity with every investment. So as you scale the business financially, you should also be scaling its impact, which fortunately in the education sector you can often do if you focus on outcomes and put them front and center. Investors have also demonstrated that if you forget about the outcomes and cut corners, you can do very poorly financially because the students, administrators, and eventually regulators will figure all that out. As an impact fund, we do explicitly label ourselves an impact fund. For us, what that means is that side by side with the financial model, we are building a social impact evaluation model with every investment. And what goes into that model as the first inputs are the operating metric outputs of the base case of the financial model, which I think is a really good discipline because that is what the deal team really thinks the company is going to produce. And then we are required to look at the third-party evidence of the outcomes produced by those outputs and to look at the economic research which seeks to value those outcomes. And so just as for every dollar of investment, we're expecting $3 or so of financial return, so too we try to hold ourselves to, with every dollar of investment, generating $3 or more of social value, which has an element of false precision. It's hard to say that an investment's going to generate $2 of social value versus $3. But I can tell you, having now been an investor in the education sector for more than 2 decades, I do think the rigor of grappling with the evidence is constructive. And I can tell you that as we have now underwritten many dozens of investments across the firm and looked at hundreds of education companies, there is a pretty big difference between those investments that we think are likely to generate $2 of social value versus $12 of social value versus $20 of social value. And usually it relates to a couple of things. One is the rigor and the size, the effect size of the impact. And interestingly, the other element is also not overpaying, because if you're trying to generate multiple dollars of value for every dollar of investment, the dollar of investment also matters, which is a good discipline. I guess in terms of particulars for our fund, we're on our 3rd fund now. We were about $2 billion or so in each fund, 2.1, 2.2, 2.5-ish in the 3rd fund, which is not yet fully closed. And I mentioned that we invest in a number of sectors. Education's our largest sector, about 30% of our fund, but not the only sector. I guess that's it for now. I'll pass it along.
Hi, everyone. My name is James Kim. I'm a partner at Reach Capital. I am a practitioner by training, so I started my career as a high school math teacher, led a college access nonprofit, and I was an admissions officer, in which capacity I was also the PM on an internal Edtech platform. Reach is an early stage firm. We do seed and Series A investing. We usually lead or co-lead those rounds. In some ways, we are sort of a traditional early stage VC. We're targeting market rate returns on our funds. We have traditional institutional investors in our funds, our LPs. But we are exclusively committed to education technology. And we do call ourselves an impact fund. And so First of all, what does Edtech mean? Very broadly defined, like many of my fellow panelists here. Anything from early childhood through K through 12, through higher ed, workforce development, lifelong learning, we'll do that all. And probably more importantly, within the broader world of Edtech, we invest in companies that we believe are increasing access to education and socioeconomic mobility and equality. We find that to be really important. Many of my colleagues are former education practitioners. It's what drove us into this profession to begin with, and so that drives our investment thesis as well. For us, impact is, it's not an amorphous concept. We've actually disaggregated it into 3 different concepts, and so impact for us consists of quality, access, and scale. And I'll talk about this more later when we talk about measurement, but we score each of our companies across those 3 dimensions. And so you can imagine, for example, at first blush, maybe a consumer company would not seem to be as impactful, but when you look at the evidence for an innovative pedagogy they may be bringing, it may still score very highly on the quality and efficacy scale. And so for us, that would be one way of thinking about impact, even when from a distribution or business model perspective, maybe lower on the access score, for example. But that's how we think about impact. And in fact, we have a venture partner, Jen Wu, who's completely dedicated to the impact evaluation and measurement and reporting within our firm. And that's been, it's just mission critical for us.
Thank you so much. That's really interesting. And I'm going to push on one point because James said it, but I think everybody in the audience is thinking and wondering. James said they are a market rate of return fund with a pretty rigorous pre and post view of impact. Is that fair? I didn't hear the other panelists say whether they were completely market rate of return or whether they think about the return, financial return and impact return trade-off in a particular way. Does anybody want to jump in and just reaffirm your position? Go ahead, Jim.
I'm happy to jump in. Others will as well. I mean, we think that there's maybe a false premise embedded in the question where there's this trade-off inherent in impact investing. We think it's the contrary case. We strongly believe that if you are investing with rigorous impact, you are tracking the right metrics and you are driving value for your stakeholders, your employees, your community, society, the policymakers, you are going to have businesses that are more stable, revenues that are more stable, and you're going to command higher multiples. And that if you do that, we are going to create or advance a trend that is beginning to take hold where more capital is going to be going after impact deals. More investors and more businesses are going to be rewarded for advancing impact. And that's how we see the opportunity to really get at this notion of impact at scale. And that's how we're trying to leverage our portfolio.
You believe that, and I do too, but I don't think most people do. So it's really struck me in all the conversations we've had that over many, many years that there's a large group of folks, trillions of dollars in traditional asset management, who do not believe that you can have market rates of financial return if you have impact. And then what I wasn't entirely expecting when I jumped with both feet in the impact world is there's a huge group of people who are involved in impact who don't think that you're going to have impact if you have financial return. So there is a small intersection, I can't do this and hold a microphone, between these two huge sets, and I think over time that intersection is going to get bigger, but I don't think it's there now.
I think I'd say I don't fully agree with the premise that it's automatically correlated, and I'm not sure, I mean, that's not what you're saying, but it is important to point out the nuance that I think it is perfectly possible to be investing in education and to have short-term returns that are not generating outcomes and therefore still generate great returns. That could be companies that, in our opinion, help, homework help that doesn't actually, push the student to struggle and to learn, that can be perfectly viral and very successful. There can be edutainment companies that can be very entertaining and addictive and viral and still not generate impact and return. So I think, or impact and learning. So I think it is important to distinguish between the fact that I do fundamentally believe that it is absolutely possible to be an impact-focused company and to be successful as a business and generate returns, but it isn't necessarily correlated. And I think it's, I think from that standpoint, the other thing I would also say, just as we make investments, it is important to recognize that education can sometimes take a little longer because of the transformation and the change of behaviors and the market adoption and working with teachers and all of the things that require policy change. And I think going in as an education investor, all of us are focused on education. We understand those trade-offs, but you have to acknowledge those trade-offs as being part of your thesis, and you can't just go in and expect it to be the same as investing in cloud computing or traditional AI or crypto.
I'll offer an example on the other end of the spectrum from what Vivian offered, which is imagine you have a company that is incredibly efficacious. They have RCTs showing that the product works and does exactly what they promise it does, but let's say the end market is actually somewhat small, right? Let's say it's like a $200 million market versus $1 billion plus, which is what VC usually looks for. And so let's say we do the due diligence and the underwriting, and we can only underwrite it to like a 2 to 3x outcome, which for early stage would be relatively small. We may still consider that. I mean, quite frankly, like it would be from a portfolio construction perspective. Like maybe we have a ton of really high risk, high reward bets in the portfolio or fund already, in which case we may still consider slotting that in, and that would still be a financially prudent thing to do, but just want to offer that example as well.
Yeah, I mean, I don't have much to add to this. I'm probably where you are, John, that there are the framing in this, deliberately in this discussion is, I think, setting up a false choice. But I think the market kind of, thinks that way too. And Vivian, I'm glad you introduced the concept of time, and we are a 15-year fund. And we're not Edtech, actually. We're certainly not health tech and fintech. We are K-12 tech. We are focused on very specific problems in the classroom. I'm sure your example holds true in our verticals, but it's hard for me to imagine a company doing well in core curriculum or assessment or staffing solutions in schools and not thinking about the quality and the coherence of that product. So, I think we see synergy, John, as you say, especially over a slightly longer horizon.
Fair. Thank you for elaborating. I think I want to move next to this really tricky issue of measurement. And I think in education, it is particularly hard, both because the span of the different types of companies and organizations and the complexity involved in delivering educational outcomes, which for as long as I've been in education, nobody can agree on how it really should be looked at. So as you think about it, both going in from a due diligence perspective, and some of you said this already, what you look for and where the rigor is on the front end, and as you think about the back end, measuring what you thought would happen and being able to say to yourselves, to your investors, and to the students and the people you're serving that you had an impact, how do you go about it? And some of you did address this already, but please elaborate. Anybody want to start?
So I guess, so we very much believe in the idea of measurement and accountability. It's something that we look for that commitment in some ways when we make the investment as we talk to the entrepreneurs. And we see it in the early signs of what metrics they're presenting to us. We don't believe, I think in some ways, as James was saying, we agree that you need to take into consideration that all of these different business models and these different interventions are quite different. And therefore, we don't believe in one single measurement or metric. We really do believe that it's important to establish the KPIs for each of the investments we make up front, set those expectations, continue to measure against them, continue to iterate on them. And that is true if you look at within our portfolio, some of our companies are, companies like New Globe are actually working in the school 8 hours with the student. That's very different from a supplemental resource that might still have great outcomes, be incredible for social emotional learning and even parent engagement, but not necessarily have the same learning gains. And the same thing goes for some of our future of work investments where, if I take a look at a company like Emeritus, which is working in executive education, partnering with top-tier universities in the US, some of their programs, their students are actually studying for boot camps in order to get jobs, there you can measure completion rates, graduation rates, and job placement rates and improvements in income. But some of their other programs are really opportunities for people to actually upgrade their skills. So in that case, it might be important for them to measure what do the students perceive as their applicability of their knowledge, whether or not the learning is actually making a positive improvement on their organizations or their own career. So it is important from our perspective to really be quite conscious about what each of the companies is trying to accomplish. And so from that standpoint, I think it is important for us, work with our companies to help them continue to measure along the way. And what we really look for is, and what we really respect and admire is when companies look for the near-term effectiveness as well as the long-term efficacy, and that continue to iterate their product design, their product development as they figure out how effective their solutions are, and they continue to move closer and closer to that holy grail. So,
I think the comment about iterating the product development based on efficacy and impact is pretty important. I do acknowledge that it's tricky, as Andrea said. The outcomes in the education sector are sometimes long dated, they're sometimes opaque, and I just came to this panel from a meeting with one of the world's largest and longest standing publishing houses that has dozens of people working on efficacy studies and spends many millions of dollars, and they find it very difficult. Also, that said, there is a lot of data in the education sector, and so and I think sometimes the excuse that it's tricky, I think sometimes folks use the difficulty as an excuse because they don't really want to talk about the outcomes, because sometimes the outcomes are crap, and that's both in the public sector and the nonprofit sector. So I think a couple of things that are important, I already kind of in my long intro where I remembered half the stuff I was supposed to answer and forgot the other half, kind of already walked through our impact underwriting methodology, but I think two things I'd call out. One is it is a decision criteria, not just a reporting obligation. So we are forcing ourselves to decide whether or not to invest based on whether or not it clears a threshold for impact. And then picking up on Vivian's point, I think we show up differently as board members and investors because of our impact orientation. And so whether it was a Dreambox Learning, that was one of the things I forgot was to mention companies and themes, but whether it was a Dreambox Learning, which started out as K-5 math interventions, personalized math intervention, and is now K-Math and K-12 ELA, but we, as board members wanted to drive up student engagement. Now, I love student engagement as a metric because that is very collinear. It's one of the most important ways to drive impact, and it's also one of the best ways to drive upsell and contract renewals, so it's financially very important as well. And so we leaned into studies, not an RCT, not something that was long and expensive and cumbersome, but really forcing ourselves to analyze the data and look at the KPIs that would be most likely to drive student engagement. Not surprisingly, and the research already shows this, teacher engagement was really the key factor in driving the student engagement, but that meant we leaned into product development around better teacher dashboards, better communication tools with teachers, pushing findings and recommendations to teachers. So I think as impact investors, you may show up differently, and that can have a long-term beneficial impact on the product and the financial return as well.
I think of the measurement and accountability question at two levels. There's the company level and there's the firm level. And so at the company level, I agree with what's been said. Like each company has a different product service intervention and they're trying to move the needle on different outcome. And so we wouldn't force some universal metric on top of them. We invest in mission-driven founders. That's part of our investment thesis. And so often they're the ones bringing to us, this is what we want to measure. Here's what we're going to report at the board level. We partner with them. We make sure that they have rigorous ways to collect and then report those metrics. And in our three-dimensional definition of impact, it's quality that maps most closely to what most people think about with impact. And so the tiers here kind of map to what people imagine. You have everything from anecdotal evidence to correlational evidence to straight up like causal randomized control trial evidence. So for example, like our company Ripen, they do experiential learning in the college classroom. they are obsessive about collecting student survey data to make sure that students are reporting that these experiences help them understand careers better and set them up for success and even help them get jobs post-college, right? And then you have all the way through to a company, Mainstay, which runs multiple randomized controlled trials for their AI chatbot, and they've shown that it decreases summer melt for students enrolling in college or increases graduation rates and retention rates for students in college. And so, you know, every company is measuring something different, but we make sure they are measuring something and that it's closely tied to the intervention that they are delivering. The firm level is where, like, that's how we're holding ourselves accountable, is that three-dimensional model that we have. Because, frankly, we're not going to push that onto our companies. But for us, we want a way to see that, you know, maybe we invested in a company at X level of impact, and through our partnership, we help those companies grow to Y level of impact, and we're tracking that across each of our companies. And so it's sort of a long-term view of the ways in which we've supported our companies in growing their impact over time.
Maybe I'll just punctuate this by, I'm thinking of a running conversation I have with a mentor and friend of mine who runs Breakthrough Energy Ventures. They have a gigaton metric by which they measure the impact of, you know, any individual company or their performance as a firm. And I complained to Rhodey about my gigaton envy. Like what is our gigaton? Is it days of learning? Is it, you know, I think the reality is we just don't have one. This is not about a better product. This is about the art of teaching and the art and science of learning. And these are complicated things. We are less mature than these other firms, so need to figure out, you know, our post-investment measurement. Our basic approach there is to not overdo it. Is to frankly overdo it on the front end. When we show up, you know, to negotiate a term sheet with equal parts educator and finance person. I mean, that is our team. You know, teachers and former school leaders and folks who know their way around, you know, finance and a term sheet. And we need to believe that the leadership and product mean it when they say quality. And there's some indices, not enough for what quality looks like. Ed Reports is one of them. Products tend to, you know, have a hard time getting a lot better. So when we're investing, we're looking at what you've done. And we're looking at what the market says about that. And then we're doing our best to hold you accountable for scaling a product that's just as good as that and then getting out of the way, which may be striking the wrong balance. I think we're going to spend some time with TPG Rise to learn more about your approach. But not reaching for a false precision that the gigaton provides, not false over there, and over-indexing on the front end.
The closest thing we have to a gigaton of carbon avoided in the education sector is lifetime earnings. So that's what we tend to and that
hard to measure.
Could have
hard to measure on the front end.
Hard to measure on the front end, but you know, if you can show that the intervention is likely to allow students to do better in school and to persist in school for longer, back to the false precision point that I did acknowledge earlier. But looking at that efficacy, looking at that impact on student performance and educational attainment, there is a lot of research, as you know, that shows that educational attainment will drive lifetime earnings. So that's one way to get at potentially your gigaton in the education sector.
Yeah, I'll just briefly note, I want to underscore the critical importance of not just the openness to, but the embrace of iteration, because I think we all come into these deals with a thesis. We, as a firm, believe that all of these companies exist on a continuum of impact, and we are trying to move them, as James said, along from where we start the relationship to their optimal impact through our work, and to create systems to help ensure that those practices and that impact will endure beyond our ownership. But you know, we don't always get the kind of metrics right at the outset, but we do develop them in partnership with the management teams at the outset of each deal, and we try to leverage third-party benchmarks wherever possible so that we can really hold ourselves accountable with an objective measure.
Great, thank you. Thanks for that conversation. Pretty interesting. I think the audience can agree with me that these people are doing it a little differently. I think by their comments, by the depth of their thinking, and the way they're going about it, this word impact probably legitimately applies. We've got a couple minutes left, though, and I'm going to close with asking each of them, do they think they're having an impact? What kind of change are they driving? It's a big thing to put systemic change on the shoulders of these 5 people. So I'm not saying that, but they are the tip of the spear, right? And so I want them to just address, do they feel they're having an impact? And also address, yes, John, a 2-part question. What's their call to action to the investing field? I heard some people say, we wish maybe this word impact would go away and everybody would do it this way. But let them say it in their own words. Are you having an impact? And what's your call to action to the investing field?
I mean, I'm happy to start by saying A Street's been around for less than 36 months. We are having 0 impact. Talk to me in 5 years, if we're lucky. This is a long, slow, steady game. I think the spirit of this discussion, and maybe, John, you said it best, is we believe there is a false narrative that you are going to trade that which is good for students and teachers and student outcomes and the joy of being an educator with financial returns. Those things live together. Can they live together on a typical 36, 48-month cycle that private equity knows well? I don't know. Can they do that on a 5 to 7 or 7 to 10 year horizon, where you're investing in building and growing companies that otherwise could not exist and could not scale products that are beautiful and elegant to use? Ask me in 5 years. That is our thesis. And I think the collective thesis up here is, we will have succeeded when other investors are saying, well, if that's impact, we're going to do that. I think that would be success.
Yeah, I'll associate myself with those remarks and just say, the answer to the question, yes, but we are really on the starting line. We haven't achieved the kind of full potential that we want to. We think we're doing the right things and we're having success, and this is kind of part of our vision for the future of what capitalism needs to become in driving better value for all the stakeholders in our society and leveraging capitalism as a tool towards that end goal. And so, yeah, we think we're making progress, but again, there's certainly more to do. But this is the opportunity to do it at scale.
I think the first thing I'd say is it's not us doing the work, it's the entrepreneurs and their teams. So to be very clear, I think they're the ones really making the deep impact. I think we do see optimism, and I think one of the CZI values is actually building for the long term. And one example of that is our portfolio company, New Globe, which was started about 15 years ago. When we invested in 2015, they were serving about 100,000 students in Kenya with affordable private school model, and had a very strong commitment to measuring their efficacy. Over time, they are now, many years later, serving about 2 million students, and they actually support the entire primary school systems for the country of Rwanda, the country of, parts of the country of Liberia, the Lagos state in Nigeria, and many other governments. And one of the things that's been really encouraging is all along the way, they've really been commissioning studies to measure their effectiveness and their efficacy. But because of this commitment to the science and the research, they also recently had a Nobel Prize winner, Michael Kramer, do a randomized control trial over a longitudinal period of the results, and basically determined that what they are doing is in the 99th percentile of all international interventions at scale in education. And that's exciting, and I think that is systemic change. What you've taken is a model that was only possible in their private schools initially, and they've made it so effective and so affordable that entire emerging market governments can implement it to support their primary school systems and transform the education for hundreds of thousands, millions of students. So I'm personally very optimistic, and I think it's incredible what the entrepreneurs are doing.
I like Vivian's optimistic note. Andrea told us to mix it up a little bit, so I'm going to take the other side, which is to be a little more pessimistic. No?
No, don't do that.
In any event, yeah, well, it would at least be hard for us at the Rise Fund to claim that, we've driven systemic change. We've only been in operation for a handful of years, and we're only, a drop in the bucket of total economics that move through the education system. I did like Marc's definition or metric that the more other investors adopt, I really think that impact investing is the right way to do investing in the education sector. I think you are going to drive higher returns. I think you're going to have better long-dated financial success in addition to the educational outcomes. And so I think the more that gets adopted, that will drive some systemic change. I think you also want us to have a call to action. So my call to action would be, taking off my investor hat for just a second. I mean, the education sector's, there's a lot of bad things happening right now, really bad things. So everybody should be as involved as possible in local politics, national politics, state politics, giving to nonprofits. There's a lot of horrible, horrible, horrible things happening as we come out of the pandemic. There's a lot of division, things got a lot worse, and it's going to take an incredible amount of not just economics, but political will to right things again. So, anyway, that's my call to action.
James, bring us home, and I'm going to give you 30 seconds. Sorry to cut you short. Thanks.
Short answer, yes, our founders are having impact. The data speaks for itself. Slightly more nuanced answer, we talk about systemic change. Technology and entrepreneurship are necessary, but not nearly sufficient. As a former educator, policy, philanthropy, nonprofits, pedagogical research, that all has to play a role. And so my call to action to our industry is let's be a little bit humble about what technology can do to change education writ large.
Thank you very much to this panel. Let's give them a round of applause.